According to a recent survey by Seeking Arrangement, a popular sugar dating website with over 20 million members, 63% of sugar babies are now seeking financial advice from their sugar daddies, with 45% of them expressing interest in learning about the stock market, a 25% increase from last year. This shift in behavior is largely attributed to the economic downturn, which has seen the S&P 500 index drop by 12% in the past year, resulting in a significant decrease in the overall wealth of sugar daddies, with the average sugar daddy's net worth decreasing by $120,000. As a result, sugar babies are looking for ways to recession-proof their incomes, with 27% of them taking on vanilla jobs to supplement their sugar relationships, a 15% increase from the previous year. The economic downturn, which has been exacerbated by the COVID-19 pandemic and the subsequent lockdowns, has had a profound impact on the sugar dating scene, with many sugar daddies seeing their wealth and income decline significantly. For instance, the pandemic has resulted in a 30% decline in the number of sugar daddies on Seeking Arrangement, with the average sugar daddy's income decreasing by $50,000. This has led to a shift in the dynamics of sugar relationships, with sugar babies seeking more financial stability and security. Seeking Arrangement, which was founded in 2006 by Brandon Wade, has seen a significant increase in the number of sugar babies seeking financial advice, with a 50% increase in the number of messages sent to sugar daddies asking for investment tips, and a 20% increase in the number of sugar babies attending financial seminars and workshops. But what's driving this trend, and how are sugar babies navigating the complex world of finance? According to a report by Forbes, the average sugar baby receives around $2,800 per month from their sugar daddy, a 10% decrease from last year, with some sugar babies receiving as much as $10,000 per month. However, with the economic downturn, many sugar babies are finding it difficult to make ends meet, with 40% of them reporting a decrease in their allowances, and 25% of them reporting a decrease in the number of dates they go on. As a result, they are turning to the stock market, with 35% of sugar babies reporting that they have invested in the stock market, a 20% increase from last year, and 20% of them reporting that they have seen a significant increase in their returns, with an average return of 15%. But can sugar babies really make a profit from the stock market, and what are the risks involved? For instance, the stock market can be volatile, with the S&P 500 index experiencing a 10% drop in a single day, and sugar babies may not have the necessary expertise or experience to navigate the market. The answer is complex, and it depends on a variety of factors, including the sugar baby's level of financial literacy, their risk tolerance, and their investment strategy. According to a study by the Financial Industry Regulatory Authority, or FINRA, 75% of sugar babies have a limited understanding of financial concepts, such as compound interest and diversification, which can make it difficult for them to make informed investment decisions. However, with the right guidance and support, sugar babies can navigate the stock market and achieve significant returns. For example, a sugar baby who invests $1,000 in a diversified portfolio of stocks and bonds can potentially earn a 7% return per year, which translates to $70 per year, or around $580 per month. But what does this mean for the average viewer, and how can they apply this information to their own lives? If you're a sugar baby looking to recession-proof your income, it may be worth considering taking on a vanilla job to supplement your sugar relationship, with 30% of sugar babies reporting that they have taken on a part-time job to make ends meet. This could mean working as a freelance writer or social media manager, earning around $25 per hour, or $1,000 per month, which can provide a significant boost to your income and help you achieve financial stability. Alternatively, you could consider investing in the stock market, with 25% of sugar babies reporting that they have invested in a retirement account, such as a Roth IRA, which can provide a safe and stable way to grow your wealth over time. For instance, if you invest $5,000 in a Roth IRA, you can potentially earn a 5% return per year, which translates to $250 per year, or around $20.80 per month. But what are the potential risks and downsides, and how can you mitigate them? One potential risk is the volatility of the stock market, which can result in significant losses if you're not careful. However, by diversifying your portfolio and investing for the long term, you can reduce your risk and achieve more stable returns. As the economy continues to evolve and change, it's likely that we'll see more sugar babies turning to the stock market and taking on vanilla jobs to recession-proof their incomes. But what does this mean for the future of sugar relationships, and how will it impact the way we think about love and money? According to a report by the Pew Research Center, 60% of Americans believe that money is a major factor in determining the success of a relationship, which is a 10% increase from last year. As a result, sugar babies are seeking more financial stability and security, with 50% of them reporting that they are looking for a sugar daddy who can provide them with financial support and guidance. But can sugar babies really achieve financial independence through the stock market, and what are the potential consequences of this trend? If you're interested in learning more about the stock market and how to invest, be sure to subscribe to our channel, where we'll be exploring this topic in more depth and providing tips and advice for sugar babies and anyone looking to recession-proof their income. Can the stock market really provide a safe and stable way for sugar babies to achieve financial independence, or is this just a pipe dream?